Hello everyone, I hope you guys are having a wonderful day. I am Arif. So in today's video, I'm trying to cover 5 tech stocks that I am holding right now and planning to buy more and more in future. So today we're gonna do a quick review of all of these 5 stocks, and then we'll discuss why we should hold it for a long term. So without further delay, let's get started. I have logged into my Wealthsimple account, so I use Wealthsimple for my investment. Under the portfolio, you can see I have invested almost 50K. Uh, so the first stock that I'm gonna talk about is Apple. I really love this share because if we see the 5 years of performance, here we can see in 5 years it has grown by 284%, which is a massive return. So currently I'm holding 19 shares of Apple, and here you can see I already made some very good capital gains, 26% under the non-registered account, and under TFSA it's 11.33%, and I'm pretty optimistic in future it will grow more and more because it has a very strong balance sheet. If we look into the market cap, it's a very big cap stock, which is 2.68 trillion. The PE ratio is very attractive, even though it's a growth tech stock. The PE ratio is very less. That's why I really love this share. The yield or dividend is 0.54%. Uh, Apple is more of a growth stock. Even though it's a growth stock, it also provides a small fraction of dividend. So in long term, it they will add more and more dividends. So I think if you are an early investor, please purchase this share for a long term, maybe for 10 years, 15 years. You can double, triple your money easily. That's what I believe. My second pick is Amazon. As we know, Amazon is a giant e-commerce company. Beside that, Amazon has a very big business, which is cloud computing. So literally, Amazon is the leader of cloud computing business. And as I'm from cloud background, I know exactly how big this business is. So this is literally a cash cow for Amazon. Currently, I'm holding 29 shares of Amazon, uh, and if we see the market cap is more than 1 trillion. So we can easily trust this company. The P ratio is high, which is 247, because this is a tech growth stock. That's why this P ratio is pretty high. It is normal. If we see the 52 weeks high, that is $146, and the current value is $103. So I think this is a very good entry point for anyone, because if we buy right now, we can buy this at a discounted prices, and within few months this price will recover and we can make quick earnings from it. uh, it doesn't provide any sort of yield or dividend. Here you can say 0.00%, because this is specifically a growth stock, and if we hold it for a long time, I'm pretty sure I'm gonna make a good amount of money out of it, because e-commerce, the cloud computing, all those business models are very attractive, and the future is pretty much IT centric, and Amazon is one of the pioneer of IT industry. So that's the reason I have massive trust on Amazon, and I'm gonna purchase more and more Amazon's share. My third pick is Google shares. Google, the parent company, is also called Alphabet. If we see the 5 years of performance, so here we can see in 5 years it has grown by 103%. It's double the money. So that means if we invested $100 5 years ago, after 5 years we gonna get kind of like more than $200. So it's more than 100% return. Currently, I am holding 29 Google share under my non-registered and TFS account, and plan to buy more. The market cap is also over 1 trillion, that is 1.36 trillion. The P ratio is very attractive. It's below 25. Even though it's a IT growth stock, the P ratio is very attractive. The 52 weeks high was $122, and 52 weeks low is $83. Also, this is a growth stock, so it's not provide any sort of dividend or yield. uh, Google, we know this is Google is the one of the leader of IT industry, and our future is becoming IT centric. So that's the reason. And also, Google is coming up with some new AI technology named Bird. So that's the reason I am betting on Google, and I'm planning to hold this stock for a long, long time because I'm pretty certain in long time frame it's gonna double, triple, and I'm gonna make a good amount of money out of this stock. My fourth pick is nvidia. So nvidia is a chip making company, so it works with microprocessors. Here it's an interesting one. So I purchased 5 shares of nvidia, maybe 2 or 3 months ago, and you can see my capital gain is more than 100%. So that means the money that I invested at that time, it just got doubled in few months, which is amazing. If we look into the 5 years performance of this stock, in 5 years it has grown by 397%. So what does it mean? So if we invested $1,000 5 years ago in this stock, after 5 years we're gonna get almost $4,000 back. So it's a massive, massive return. The future is very bright for this stock. The market cap is $714 billion, which is great, and the P ratio, as this is more of a like growth stock, growth IC stock, the P ratio is a little bit higher, which is expected. In this case, it's 166. The 52 weeks high is 290, and 52 weeks low was 108. So still it has room to grow, and I think if we purchase this share and hold it for a long, long time, it can easily double or triple our money. You can see the results within few months. My money got doubled from this share. The yield or dividend, it provides a small fraction of dividend, that is 0.06%, because most of the income that it's generating, it's reinvesting for R&D, research and development, so that it can come up with some better products. So it's always better in this way, because it's now in growth state. That's why it's called a growth stock. My fifth and final pick is Shopify. We are all familiar with Shopify, so it's a giant e-commerce platform. So I recently purchased almost 35 shares of Shopify, and here you can see I made some good capital gains out of it. If we look into the 5 years of growth, it has grown by 293%, almost like 300%. So it has a very bright future. uh, the market cap is $81 billion. The PE ratio is very attractive. The 52 weeks high was $73, and 50-week low was $33. And I think this is a stock that you should hold for a long, long time, because here you can see right now it's facing some issues, so that's why it's a little bit down. But in 2021 it was $208, so there is a very big difference, and it has the potential to reach higher than this. So definitely it's a good time to enter to this market and purchase some Shopify shares for capital gains in near future. This is a growth stock, that's why it doesn't provide sort of yield or dividend. That's why it's at 0.00%. But we should purchase this share. So my way of thinking is that I'm gonna purchase this share, and I'm gonna kind of like almost forget that yes, I do have the shares. Maybe after 10 years or 15 years, then I will check these shares, and by then I have done my study. I am pretty certain that these shares, these 5 shares that I have discussed today, will go up. I will hold it no matter what happens. Thank you so much, guys, for watching my video so far. So if you got any questions or any concerns related to these shares, please feel free to send me a message under this comment section, and I guarantee that I'm gonna answer you back. That's all for today, and thanks again. If you like this video, please like and subscribe to my channel for viewing this sort of video in regular basis. And that's all for today. Goodbye.